A couple of years ago, my little cousin asked me, what is the stock market? She wasn't joking. She had just started her first job and wanted to do something smart with her money, but she had no idea where to start. She'd heard terms like stocks, ETFs, and interest, but it all felt like another language. So I broke it down for her, step by step, the same way I'm about to do for you. By the end of this video, you'll understand what the stock market is, what an ETF is, how to buy one, and why doing so consistently over time might be the most powerful decision you ever make for your financial future. Let's get into it. But first, if you want to learn how to day trade or invest like a pro, visit tradingwithforce.com. That's where I teach you everything I know from beginner investing to advanced trading strategies, all in one course. Enough of that, let's get into the video. So let's start with the foundation. What is the stock market? The stock market is where people buy and sell tiny pieces of ownership in companies. Those pieces are called stocks or shares. Now, when you buy one, you become a part owner in that company. So if you buy a share of Apple, you technically own a small piece of Apple. Same with Amazon, same with Nike. When those companies grow in value, your shares become more valuable. If they pay out profits to shareholders, that's called a dividend, and you can earn those too. The stock market is like a giant online marketplace. Instead of buying clothes or electronics, you're buying ownership in a business. Now, you might ask, why does this matter to me? Because this is how everyday people build wealth. They invest money into the market, let it grow over time, and they use that money later for retirement, financial freedom, or just living life on their terms. So why does investing matter? If you just leave your money sitting in a bank account, it loses value over time. That's because of inflation, which slowly reduces your purchasing power. But when you invest, you give your money the opportunity to grow through something called compound interest. Let me explain that in simpler terms. Let's say you invest $100 and it grows by 10% in a year. Now you have $110. That's pretty simple, right? The next year you earn 10% again, but now it's 10% of $110. That's $11, not $10. It went up. Then the year after that, you earn interest on $121. That extra growth year over year is called compounding. It's like a snowball that gets bigger the longer it rolls. And over 10, 20, and 30 years, that can turn small monthly investments into hundreds of thousands of dollars. So what is an ETF? Now that you understand why investing matters, let's talk about ETFs because they're the simplest, safest way for beginners to get started. ETF stands for Exchange Traded Fund. Don't let the name intimidate you. It's just a basket of investments, stocks, bonds, or both that you can buy with a single click. Let's say you want to invest in the 500 biggest companies in the United States, like Apple, Microsoft, Amazon, Google. You get the point. You could buy all 500 stocks individually or just buy one ETF called SPY or VOO and instantly own a piece of all of them. One trade, instant diversification, lower risk. That's the beauty of ETFs. They let you invest in entire sectors, industries, or even countries with just one purchase. They also trade like stocks, which means you can buy and sell them anytime the market is open. So let's take a look at some real-world ETF examples. SPY or VOO, these track the S&P 500, which include the 500 largest companies in the US. This is the most popular starting point for long-term investors. QQQ, this tracks the NASDAQ 100, which includes tech giants like Apple, Amazon, and Nvidia. VTI, this one covers the entire US stock market, thousands of companies all in one single fund. And then you've got ARK, a more aggressive fund that bets on innovative companies if you like higher risk and higher potential reward. The point is, there are ETFs for almost everything: energy, real estate, clean tech, dirty tech, even specific countries. You can invest in what you believe in. So how do you actually buy an ETF? Well, step one, you open a brokerage account. This is your online platform that connects you to the market. Here are a few beginner-friendly ones. Fidelity, I have an account there. Charles Schwab, also have an account there. TD Ameritrade, actually have an account there. Robinhood, have an account there. Follow my $60 everyday challenge that's being done in Robinhood. Webull, have an account there as well. That's actually nuts to have accounts in all of these firms. That's a day trading futures account. All of those let you sign up online. It's just like opening a bank account. You'll fill out a few forms, verify your identity, and link your bank to deposit those funds. Once you've deposited the money, you can search for the ETF by its ticker symbol. For example, type in VOO, then hit buy. That's it. You've just made your first investment. All right, so how much do you need to start? The really cool thing is you don't need thousands of dollars to begin. I started with, $100. Many brokerages now let you buy fractional shares. That means you can invest $5, $10, $50, literally whatever you've got. If you do that every month consistently and you reinvest the returns, You'll be shocked at what that turns into over the years. Let's do a quick example. If you invest $100 a month into the market and it grows at an average of 8% per year, after 30 years, you'll have over $135,000, even though you only put in $36,000 of your own money. That's compound interest at work for you. All right, so what are some common questions? First one, can I lose money with ETFs? Yes, all investments involve risk. The market goes up and down, but historically over long periods of time, diversified ETFs have gone up, especially those that track the overall market. What's the fee to own an ETF? Each ETF has an expense ratio. This is how much the fund managers take as a fee. For most popular ETFs like VOO or SPY, it's very low, often around 0.3%. That means you'll pay 30 cents a year for every $1,000 you've invested. How long should you hold? Well, for beginners investing in broad ETFs, think long term. We're talking years or decades. The goal is to ride the wave of growth and let your money work for you over time. Remember what I told you at the beginning? My cousin had no clue what the stock market was. Now she's building a portfolio of ETFs, investing every single month, and watching her money grow with confidence. You can do the exact same thing. It doesn't take a finance degree. It doesn't take luck. It just takes the decision to start and the patience to let it work. Open your brokerage account, pick a simple ETF, start small, and be consistent. And if you want help learning how to grow from investing into active day trading, or you just want to understand the market like a pro, or you just want to say what's up, visit tradingwithforrest.com. I'll teach you everything I know. Now go make your money work for you, and I'll see you in the next video.